If a stock only needs $3 to change the conversation, you pay attention. NIO is sitting near the $7 line right now, and the next 60 days are loaded with the kind of events that can either unlock a clean run or shut the door. The question on your screen is not about dreams or a 5-year horizon. It is simple. Can NIO reach $10 mark by December 31? I'm going to show you the catalyst that can actually do that and the hurdles that can stop it, using only current data and what the tape is telling us today. Start with what the market cannot ignore. NIO just crossed 90 million cumulative battery swap services, and it did it only 100 days after hitting 80 million. Daily usage has moved past 100,000 swaps. You do not reach numbers like that without a real user base and a network that people rely on in everyday life. This is not a lab demo. It is a live utility that turns range worry into a solved problem for a large pool of drivers. That kind of habit formation has value, and it usually shows up later in the multiple when the financials begin to catch up. One buyer is not the market, but it signals that professional money is willing to take risk into year-end. When the headlines are noisy and someone with a process still adds, that often tells you the floor is getting some reinforcement. Now for the part that will decide whether you see 10 on your screen or not. Earnings in November are the hinge. Several calendars flag November 19 before the open as the target for the third quarter release. If the company shows a clean combination of revenue in line or better, gross margin that steps up, and a credible path on operating leverage, the stock can move in ways that surprise anyone who only glanced at the lawsuit headlines. If those numbers miss or if guidance is cautious, the move to 10 becomes much harder in the time we have left. That is the math. Sentiment follows numbers when a name is priced for Dow. You might be thinking that an operational milestone and a possible earnings date are not enough to build a case. Fair. So here is the context that explains why this setup is loaded and why the next print matters more than usual. The last 12 months saw delivery growth that any car maker would respect. NIO put up around 222,000 vehicles across the year, roughly 40% higher than the year before, held by the Anvo family as it broadens the portfolio. Growth by itself is not a finish line, but it is the raw material for a better margin profile if pricing holds and the mix improves. Investors will be watching how much of that growth translates into gross margin progress in third quarter and fourth quarter updates. There is a reason the market is still cautious though. In second quarter, the company reported a heavy loss measured in hundreds of millions of dollars. Summaries put it near 700 million at current exchange rates. Losses like that keep a lid on valuation until there is evidence that the slope is changing. That is why the November call is the lever. Show margin expanding and expenses under control without sacrificing growth, and the multiple can expand quickly from a depressed base. Miss that bar, and the price spends more time chopping sideways while investors wait for clarity. All of this is happening while the Chinese EV landscape is in one of the hardest phases we have seen. Too many players are fighting for share. Discounts are still common. Some export routes face political friction. Every operator has to prove that growth can happen without bleeding cash. That pressure does two things. It makes the near term harder, which is why this stock trades where it does. It also sets the stage for survivors to command better pricing power when consolidation takes hold. The market trades the first part now and prices the second part later, usually right after a quarter shows that the turn is real. There is also a headline that no serious investor should ignore. Singapore's sovereign wealth fund, GIC, filed a lawsuit in the Southern District of New York alleging that NIO inflated revenue in earlier periods through battery asset transactions with an affiliate commonly called Winung. The initial reaction took the stock down hard. Legal risk does not vanish in a week. It can cap rallies until management addresses it with enough detail to satisfy analysts and the court process starts to move. Price action into year-end will track how the dialogue unfolds. If the company communicates clearly, provides transparency, and nothing new escalates, the stock can decouple from the headline as the earnings story takes the wheel. If fresh claims appear or if the case gains momentum, the market will assign a higher risk premium and the path to 10 narrows. Let me anchor this to you. From $7 to $10 is about a 43% climb. You do not need 10 green weeks to get there. What you need are two things that often travel together: a catalyst day that delivers an 8 to 15% jump on volume that clears the 50-day average with room to spare, and then a follow-through stretch of higher closes that do not fully retrace. This name has printed those kind of days around delivery beats, surgical guidance changes, and credible infrastructure announcements. The 90 million swap milestone is exactly the kind of proof point that can support a stronger narrative if management pairs it with improved unit economics on the call. Investors do not just want the count. They want to hear how site utilization is improving and how OPEX per station is trending as density increases. When that story gets concrete, the market starts to value the network, not just the vehicles. Here is the part that smart money watches before an event. You look for signs that pressure is building under the surface. The options board gives clues. If you begin to see rising open interest on near-dated calls just above price, for example the 8 and 9 strikes, with volume that looks like fresh positioning and not just closing trades, that often tells you that traders are leaning into a move. You do not trade on this alone, but when it lines up with improving fundamentals, you can get the kind of squeeze that turns a good day into a run. The tape already showed that a single legal headline can knock the stock down fast. The same liquidity cuts both ways on a positive surprise. Product narrative matters more than people think in the next 60 days. Management has told the market that a new flagship SUV called ES9 is planned to be unveiled in the second quarter of 2026. It is bigger than the ES8 and it sits at the top of the pyramid. That choice keeps the brand's premium halo alive while Anvo and other sub-brands go after volume segments. In practice, this helps analysts defend higher average selling price assumptions in the outer months, and it takes pressure off the idea that the company is abandoning the top end to chase volume. For a year-end trade, that confidence anchor counts. It does not push price by itself this quarter, but it makes investors more willing to pay for the story if November's numbers show progress. We should talk about Anvo for a moment, because it is a quiet force behind the delivery base. The brand reached 100,000 cumulative deliveries mid-month and is stepping up momentum with the L90 and refreshed L60. Mix matters here. If higher trim sales grow and incentives stabilize, you get a lift to gross margin that can punch through the narrative that China is only a price war right now. Analysts will look at the mix disclosure closely when deliveries and the quarterly deck hit. If the company offers more color on cross-selling into the swap network or subscription attachment rates tied to Anvo, even better. That kind of detail turns skepticism into math. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. Is the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. Let me tell you something that has nothing to do with storytelling. The mid-sixes hosted the first serious bid after the lawsuit sell-off. That zone matters because it tells you where cautious accumulation showed up. If price loses that area on heavy volume, the stock is telling you the market wants lower first and your sprint to 10 becomes a grind. If it holds and the earnings day adds fuel, shorts will feel pressure and the path to 8 and 9 opens fast. From there, you only need one clean headline to print 10. This is not about predicting the future. It is about understanding how sequence and positioning create moves. None of this works without the boring part, which is money in and money out. In second quarter, the company lost roughly $700 million. The only way 10 arrives in the next 60 days is if management convinces investors that the loss trend is bending the right way and that gross margin can keep stepping up while OPEX stays disciplined. That is why even small improvements draw big reactions when sentiment is low. A few hundred basis points of margin progress with a believable explanation tied to mix and scale can add billions to market cap if investors see a roadmap to break even. If the numbers are soft, the market will wait. And time is the one thing you do not have if you want the $10 headline this year. There is a powerful psychological element you can use to your advantage when a stock is near a round number target. Traders crowd into levels like 10 because they are easy to frame and they pull in attention. If the post-earnings reaction pushes prices through 9 with volume and the lawsuit chatter does not escalate at the same time, momentum players will often test 10 just to see who is on the other side. That is where those battery swap headlines help. They give bulls something objective to point at, while the bear case relies on broader industry worries. The market respects proof, and 90 million swaps delivered in the wild is proof. Now think about what could derail everything even after a solid report. The China EV space is not just competitive, it is political. European tariffs can shift export math. Domestic incentives can change. If policy or macro tightens suddenly, investors rotate towards safety and growth names with legal noise attached get discounted first. This is why I keep bringing the focus back to numbers and communication. If management can show progress that stands on its own and speaks clearly to the lawsuit, the stock can hold gains even if the macro wind is not perfect. If they leave gaps, the market will fill those gaps with fear. Notice how different the conversation feels when you stack today's facts. You have live usage of a unique infrastructure that few can match. You have a product map that maintains a premium halo while expanding the base. You have a lawsuit that scared the market but can be managed if the company addresses it with evidence and transparency. You have a calendar date that can flip sentiment quickly if the numbers cooperate. You have at least one visible institution adding exposure. All of that is happening while the price sits a short sprint from a headline level everyone understands. Put that together and you see why this is one of the most asymmetric setups on your watch list. So will NIO stock hit 10 by year end? Here is the honest answer that respects your time. Yes, it can. The move requires a clean earnings day with evidence of margin progress and disciplined spending, paired with steady delivery commentary and no escalation on the legal front. The battery swap milestone supports the story and helps investors believe that the user base is real and sticky. The RVC purchase adds a small but useful signal that big money is willing to lean in. The ES9 plan tells you the brand is not abandoning the top end of the market while it scales volume. If those elements hold together over the next 30 trading days, it is realistic to see 9 on a post-report reaction and 10 on a follow-through day. If the numbers disappoint or the lawsuit flares, the stock can stay in the mid-single digits while it rebuilds trust. That is not doom. It is just how the market prices risk when the clock is ticking. Keep one practical habit as you watch this unfold. Check the company's investor relations page for the official delivery and earnings posts rather than relying on social media summaries. Those are the numbers funds model. Then look at the first 15 minutes of trading after headlines hit. If price gaps up on strong volume and holds above the opening range through the first hour, you have a real shot at a day that can carry further. If it gives back everything quickly, wait for clarity. The market is very good at telling you when it wants to go. Your job is to listen. This is it for this video, guys. Thanks for watching and please make sure to subscribe, like and leave a comment down below.